Can you hear me now? Testing 1, 2. There we go. I think we're coming through now. You guys hear me now? All right. Sorry about that. Weird. I have no idea. It's been working fine all week. Anyway, welcome. I'll try to start over as best I can. My name, of course, is Steve Chappell, the Director of Trading Systems Development here at VectorVest. Delighted to be your presenter for this important presentation, I would say. We have our flagship event coming around the corner. It kicks off next week on January 8th, 9th, called our 2-day investment seminar, which will be 100% live stream at this point. COVID's kind of thrown us for a loop, and we like to kick things off live and in person and on webcast all at the same time from sunny Tampa, Florida every year. It's my opportunity to get down there in my old stomping grounds, and that's where I grew up, And so this will only be the second year in the last 20 that I won't be down in Tampa to deliver this event. But there's some benefit to that we're going to get into as I shed some light on this event. Because we're going to be doing it 100% telecast or webcast over the web, it's going to allow us to get a lot more presenters in order for you guys to really get the best of the best in terms of the topics that we're going to cover. So it's going to be awesome. But the obvious question is, why? Why should I go to the event? And so I'm going to try to address that right up front. And the simple answer for a lot of folks is you just get buried by data. With the way that information is delivered to us in this day and age, with all of our Twitterverse and TV and everything, email, investment newsletters and all this kind of stuff, it's real easy if you're not careful to just kind of get buried by all the information that you're receiving. And it can even lead to kind of a paralysis type thing where it makes it incredibly difficult to decide exactly what you want to do. So this event is all about streamlining that down to just learning a few core things that you really must know in order to make a lot of money in the stock market. And so we kind of pride ourselves in delivering that caliber of an investment course. It is 2 days, and but we really only cover extremely well in those 2 days the simple things that you must know. And what do we all really want? Is another way to address should I attend? And what we're going to be showing at this 2-day event is how you can consistently outperform the S&P. If you spend any time at all looking at things like CNBC, you're going to have a lot of experts on there telling you that things like you can't time the market, telling you things like all you need to do is just take a portion of your paycheck, and sink it into the S&P 500 each and every month, and these kinds of things. Well, at this 2-day investment workshop, we are definitely going to show you that you can, in fact, time the market. You can, in fact, do better than just buying the S&P. And that's what it's all about. I mean, otherwise, why not just do that? So going to this 2-day event will teach you the tactics and the information that you need to make this a reality. And it's going to be everything from how to handpick and kind of do it yourself, all the way up to just following a complete trading plan that's laid out A to Z and everything that you need to know to make it happen as well. So, and everything in between. So it's going to be terrific. But what it's going to teach you most importantly is how to not make the big mistakes. And the big mistakes, the number one big mistake is no plan. Not having a plan is the worst thing that anyone should avoid, like the plague. And you know what I'm talking about, guys that just kind of see an article come across in the email and say, "Boy, buy this new EV stock," and away you go. And that's not really having a plan. We need to have a plan to really do well and make money consistently. The other attraction, for whatever reason, I guess it's just human nature, is a lot of times people gravitate towards extravagant plans, complicated plans, because they seem like, boy, whoever put this thing together spent an awful lot of time figuring things out, and this really checks a lot of boxes here, so it's got to be, a proven moneymaker. And oftentimes, what I've found over at least my 20 years, in this field, is that it's the simple things that actually make money, not the complicated ones. And so, we'll spend a good deal of this 2 days, not only showing you proven, consistent trading plans, but also ones that are simple. And anybody can do it. And I mean anybody. I don't care if you're, 19 or 92. Anybody can do the things that we're going to talk about at this workshop. So let's talk about how to fix it. All right, so we want to have a simple proven plan, and we want to stick to it. And having the plan is one thing, but then sticking to the plan is sort of a whole new level for folks. Because a lot of times what happens is you have this great plan, you put it out in the stock market, and the first day it doesn't do so well, and you say, gee whiz, what's going on here? So not only are we going to show the simple plans, we're going to give you the confidence to stick to it, and I think that's something that is invaluable. You got to stick to the plan. That's going to get you to grandma's house at the end of the day. Okay, so let's talk about what a simple plan should include. So there are three main things, and each of the systems that we're going to be showing in this 2-day event, and all of the content eventually leads you to focusing on these three main things. We're going to need to know when it's the right time to buy stocks at all, and so there are times where you absolutely don't want to buy the S&P or absolutely don't want to buy stocks, and that's when the market is in correction, or even on substantial dip. And so we're certainly going to be helping you identify the right times to get going, like March of this year, for example. Markets are a lot higher now than they were back in March. The right time to have started was in March. The wrong time to have started was in February, all the way down through into the latter stages of March. That was the absolute worst time, because all you would have done is seen your nest egg just continue to shrink and shrink and shrink. Whereas if you can avoid that situation and then buy stocks as the market is low, that's where you really make the money. Okay. Number two, we're going to show you the best stocks for you. And so that's where VectorVest also separates itself from everyone else, in that we have a system that is broad enough to where no matter what type of investor you are, if you're aggressive, we can show you the right stocks for the aggressive investor or trader. If you're conservative, you got a big nest egg, and your number one consideration is capital preservation, but then getting income and a little bit of price appreciation is all you need. We've got ways to show you how to do that as well, and we will be showing that, of course, at this 2-day event. And then managing your portfolio in just minutes. These plans don't require a lot of time. They really don't. And the more comfortable you get with them, I'm saying 5 minutes or less a day. Initially, when you're still trying to figure out the program and things like that, it can take a little bit more time, but that's just because, you're not quite adept enough with the software or whatever. It really shouldn't take more than minutes a day. Really shouldn't. Okay? So no more agonizing over the weekend and, putting off activities and things like that. You should be able to live a normal life, and get everything you need done in just a few minutes each and every day. Now, let's just talk briefly, realizing there's going to be a lot more content in the course, right? But talk briefly about knowing when it's the right time to buy. So what you have on your screen right now is actually a part of the product called the market timing graph. And here we do time the market. We don't. Now, the difference between, I think, what a lot of the pros are saying on TV and other places about you can't time the market is, I think they liken, for whatever reason, probably to serve themselves, right? They liken timing to prediction. Well, we don't predict, we follow direction. So the market has to be moving a given direction for a period of time before we issue a signal to buy or sell stocks. And so what you see there are a couple of arrows. The first one, the red arrow, is when we really started to see the fruits of the guidance that we had already been giving for the prior couple of weeks, in that the market was looking toppy. Now, I'm not saying we knew COVID was going to become the situation that it did. Nobody had that kind of knowledge. But what we do know is that when our indicators reach certain pivotal levels, that the market was likely going to have some sort of correction here anyway, okay? And then we have a bona fide signal that will come into play. That would be where the red arrow was, and it could have prevented a catastrophic amount of loss in a lot of people's portfolios. And we did not get a buy signal at any point with our mechanical approach until after the damage was completely over. And it was literally the day the market took off because of the way that we have analyzed the stock market for the last 20 years. We've got a systematic way to do this. We don't just say, hey, look, we think the market's nasty. It's time to tell our subscribers to get out of there. And we don't just say, hey, look, it looks like the market's blasting off. Now's the time to tell everybody to get in. It's mechanical. So all we do is stick to the system. We don't have to provide any intuition whatsoever, because if you're just looking for a blast off day, I mean, any one of these big green days on the way down could have potentially been perceived as a blast off day. See what I mean? Well, there's more to it than just that. So long story short, we've provided great signals all year long, all the way from aggressive, which would have been the first green arrow, all the way down there at the bottom, to the more conservative, which would have been the second green arrow off the bottom, okay, and everything in between. So we're going to be showing you how you can take those aggressive signals, if you want to be aggressive mindset with your portfolios, or play things a little closer to the vest and be more conservative. We've got a timing model that's going to suit your needs, is the story, okay? And we're going to spend a lot of time helping you identify which signal you want to give preference to for you as an individual. All right, and then what we do next is we say, all right, now what you want to do is start matching stock selection with that timing methodology. In other words, if you're an aggressive investor, you're going to want an aggressive timing model, and you're going to want aggressive stocks, because you're going to want stocks that can shoot up the page, right, more quickly than somebody who's after a very safe stock and some good dividends and some mild capital appreciation. Two different ends of the spectrum, right? But what you want to do is you want to match them. You want to have conservative timing and conservative stock selection, and you want to have aggressive timing and aggressive stock selection, so that you can really ramp up those profits. So finding the best stocks for you is an eye-opening couple of segments in the course. Our founder, no truer words have ever been spoken than from his little green book, Stock Strategies and Common Sense. This is just a little clip from page 59. It says, good portfolio management starts with buying the right stocks. Okay, it absolutely does. If one of the worst things you can do is, if you're a conservative person with a conservative-minded portfolio, is to go out there and buy an EV stock, electric vehicle, when we say EV, right? How many of those have we seen? Batteries like QuantumScape, and you've got Nikola, and all these stocks, right? Those things will drive you nuts, and the odds are you're not going to make money with them, because you're going to sell them at the worst time, buy them at the worst time, and all those kinds of things, because of the nature of who you are. Whereas if you're aggressive, you're well equipped to deal with those, and with the right timing, you can do really, really well. Okay, so it all starts with buying the right stuff to begin with. Then management becomes a lot more friendly. It becomes a lot easier. Okay, so just real quickly, we've been doing this for years. We actually used to do this at trade shows. We'd have people come up to the booth, and we'd help them by analyzing their portfolio, point to what part of this spectrum that portfolio actually falls into. And it was eye-opening for a lot of folks, because a lot of folks would come up to the booth and they'd say, hey, look, I'm a prudent investor. I want some relatively good, safe stocks, but I want to make money, man. And what would happen is we would plot, the average values of their stocks and how we would qualify them in VectorVest. And a lot of times they'd be on the other side. They'd be in the aggressive to speculative side of things. So what we do is we use a couple of indicators. We use one called relative value. We use another one called relative safety. And what these two indicators do is they help us plot out risk to reward. based upon the underlying attributes of the stock. And of course, we look at a lot of data. You know, we do all the analysis for you, is the main thing to say here. But relative value looks at upside potential. It looks at, should I rather put my money in a good, safe corporate bond or buy the stock? What's likely going to give me a better return, and even potentially far better return? You know, so high relative value companies typically have high earnings growth rate type of attributes. There's certainly some other factors. With relative safety, that's the reward side, right? With safety, that's the risk element. Okay, so with safety, we look at about a baker's dozen in terms of factors. You know, all this is proprietary, so I'm just trying to kind of, and this is just a quick webcast, so I'm just trying to get your feet wet with these indicators. See, we'll talk a lot more about them at the show. But relative safety is an indicator of risk. It looks at the consistency and predictability of financial performance. Okay, so it looks at a number of things. But if you boil it all down, companies with high relative safety ratings in our program are companies that grow earnings quarter after quarter after quarter after quarter, year after year after year after year. Okay, they're going to have the higher safety ratings. They're also going to generally be, you know, more debt-free, and a lot of other factors come into play here. But if you're a prudent person, what we try to do is truly point you towards prudent stocks. Those are going to be stocks that grow their earnings quarter after quarter after quarter, year after year after year, and also generally have high earnings and high earnings growth rate. Okay? And not just today, but on a forecasted basis. Whereas, you know, if you're die opposed, if you're a speculator, you know, you just kind of throw caution to the wind. We still have some ways where, even though the stocks won't have earnings growth, and consistent, predictable earnings patterns, right, we can still point you towards some of the hidden gems. Okay? But what this graphic is really displaying to you is the essence of how we analyze stocks, and then how you would go about trying to pick some good winners for yourself. You'll see down there in conservative in the bottom left, you know, it's still got good reward, and it's lower reward, right? But it's also low risk. And so the main thing that you want to go after is safety. That's your primary function in VectorVest. That's the only thing that really matters. And you don't just want good safety, you want excellent safety. It's the focus. So that's what this slide is trying to convey. If you're prudent, you want to focus on both. If you're conservative, you want the highest safety ratings you can find. Okay? If you're a speculator, good luck, you know. But we can show you how to hit some home runs. Anybody remember Reggie Jackson? You know, Mr. October? He was known for hitting home runs, particularly when the games were on the line, right? But he also did another thing more than anybody else. He struck out, you know. So a speculative investor, we're going to be able to find some of those stocks that'll hit a home run, but you're going to swing and miss on an awful lot of stocks too. See what I mean? With aggressive, the nice thing there, and what separates you from a speculative investor, is the earnings and earnings growth, you know, the upside potential that the stock actually already has. So, but anyway, hopefully that at least gives you some idea that A, we know what we're talking about, and two, that we can easily then take a list of 8,000 stocks and begin to hone in on the 20 or 30 stocks that you really want to focus on. See what I mean? So instead of having to look at 8,000 company financials documents that are 27 pages long if you're lucky, you know, it's all baked in, and in VectorVest we can rank them out, put them on a screen very quickly, and then, you know, you can start picking some of your favorites. Okay? So prudent stocks, you know, they're generally going to be smooth sailing, high flying types of stocks. Aggressive stocks are going to be stocks that are a lot more volatile, but that shoot up the page more quickly, okay, when they're hot. A conservative stock, it's generally going to move up the page as long as the market's healthy, right? But not at the same pace as a prudent or conservative. Your main focus is preservation, so they're going to have a lot less volatility, so they're not going to move as fast. They're going to be more of the tortoise wins the race kind of a situation, okay? And then speculative investors, generally, you know, most speculative type instruments tend to have some really big moves over a sequence of days and then, kind of flounder around a bit again. So we've actually marked the general trajectory there as downward. But there are certainly instances where, you can really hit a huge home run with a speculative investment if you get it right. So again, we'll show you ways to do that. Okay. All right. Now at the course, then we're going to be laying out performances like these: 109, 162, 292 annualized rates of return. And those returns range from blue chips, which was the first one, all the way down to, more aggressive to speculative type instance. And they all jive with market direction and market signal, along with the appropriate stock selection strategy for that quadrant. Okay. So we spent some time really going through some very clear examples when we've got a lot more time to do it. Okay. Just want to give you a feel for it here. So number 3, manage your portfolio in just minutes a day. Here's some simple guidelines to get you started right now. We're going to expand on these guidelines a bit at the show, okay? But number 1, use a dollar weighted system. So I've got a bunch of new friends that have started to invest in the stock market this year. We've been hearing on CNBC and other places this whole thing, about the Robin Hooders. Well, I can identify with that because I know at least a dozen of them that are brand new, and I'm getting all kinds of texts all the time and everything. But the one thing that I'm still trying to teach them, now, after having sent dozens of text messages back and forth, if not more, hundreds actually, is dollar weight your investments. So, what you don't want to do is buy 100 shares of Google and then, 100 shares of AMD, right? Because you're going to have, I don't know, what's 3,000 times 100, 3,000 times 100, right? 300,000. You're going to have 300,000 in Google, and you're going to have, a lot less than that in AMD. So you don't share weight, you dollar weight, okay? You don't buy 100 shares or everything. What you do is, if you got like $100,000, okay, and you're going to build up to a portfolio of a reasonable amount, let's say 10 stocks, you spread that $100,000 evenly among the 10 stocks. That way, no one position can submarine your portfolio. In the example that I gave before, if you're not careful, the stock that you end up having a lot more money in can be going down. The other 9 stocks that you bought can be going up, and you're losing money. And that's happened to one of my friends this year, So, that's number 1. You want a dollar weight. So $100,000, 10 positions, that's $10,000 per position. See what I mean? Number 2, hold 10 to 20 stocks. You want to spread risk among enough stocks to where you can survive. Again, it does no good to dollar weight into 3 positions, because that can still get you in hot water if one of the stocks really, starts to tank on you. So 10 to 20 positions, particularly when you're brand new. I've actually found over the years that 7 is kind of my number, right, at this point. But it's great to start somewhere between 10 to 20, okay? Consider using industry diversification. Don't buy more than, say, 1 to 2 stocks, 2 at the most, particularly with just 10, from any one industry group. Because there again, if things get turbulent, if you're in a bunch of petroleum stocks right now because petroleum had been hot for a little while, if petroleum turns over, right, that can really sink your portfolio if you're not careful. So you want to have spread your money evenly. You want to have enough stocks to spread risk, and you want to diversify so that if a particular segment in the market gets hit, that it doesn't submarine you. As far as tips for managing your portfolio, you want to follow a market timing signal that best fits your style. That's one of the things that gets people in trouble, is they see how great some of those aggressive signals are, and they figure, well, I might just use that. But if it's not right for you, what happens is a lot of times those early signals, the market's still trying to get going, and it can have some volatility down there, shake you out, and then take off, and you're left scratching your head, So you got to be real with yourself, and you got to pick the signal that's going to be best for you. We've got aggressive, we've got conservative, and we've got a couple in between. And we'll be spending a lot of time on that at the show. Never risk more than 1% to 2% in any position. So if we go back to that $100,000 portfolio, this means don't risk more than $1,000 in any single trade. Okay, so 10,000, you know, if every investment's 10 grand, you can't lose more than 1,000. That means you got to set about a 10% stop loss. You say, well, that's too tight. Well, okay, then don't use all the 100,000. You know, use 50. Then you can use a 20% stop loss. See what I mean? 50,000, 10 stocks. One, you know, can't risk more than $1,000. You could afford a 20% stop. So there's ways to manipulate these numbers, but the one thing you don't want to do is risk more than those percentages, because when you do, there will come a time, no matter how good you get or how good you are, where you're going to go through about 7 or 8 trades that don't go your way in a row, you know, and if you don't abide by that, it becomes very difficult, you know, to dig out of that hole fast enough to get on the other side of it. And that's kind of where the snowball begins for a lot of folks, okay? Being too risky with their investments. All right, so use Profit Locker. We're going to show you the best stop loss on the market, period, and give you some guidance on some ways that you can set it up based upon who you are as an investor at this workshop. It's patent pending. Nobody else has it. Nobody else ever will. And it combines all the attributes of a trailing stop, a gain loss, and a floating stop all into one single stop loss. It's super sexy and it's super good. And we'll be showing why I can say all those things at the show, and really showing it a lot. This is an example of a trading plan that you'll learn about. This is from Retirement Services. This is a strategy we call ruler stocks. This is really for the, you know, what Jim's going to talk about. He's got a presentation called that deals with what we call the ultimate retirement solution, okay? And the ultimate retirement solution is, well, the number one focus is to keep making more money. Okay? That's your, I'll let the cat out of the bag. That's your ultimate solution. But there's 3 ways, there's a 3-prong approach that we're going to take to that. We're going to look for capital appreciation. We're also going to look for income by way of both dividends and options, right? And the third piece is we're going to learn how to use options to mitigate loss, and how to use timing to mitigate potential loss. Okay, so by doing that, you've got a complete system. This is just the capital appreciation side, so it's good just to give you kind of a baseline. This is just the stocks that you want to go up in price that are safe. Okay, our stocks have been kicking back more than 30% annualized rate of returns for the last several years. Okay, whereas the S&P, you know, over the same time frame is up about 16, and that's cooking for the S&P. You know, the S&P longer term average, you're talking 6-7% a year. It has really been moved. This market has been moving, hasn't it? You know, but you're kicking back more than 2 times market performance here with our selections. So we said we want to show you things that are going to grow your nest egg more quickly. Why is that important? Well, it's more than just beating it by twofold, because I don't know if you guys know the rule of 72, but you can take that annualized number and divide it into 72, and that's how long it takes to double your money. Okay, so right now at 30, you know, 30 and a half, roughly you're doubling your money every 2 and a quarter or a half years. Okay, see what I mean? Whereas if you're kicking back 16, it's going to take 5. And where that really starts to get interesting is about 20 years down the line. Those numbers there's a compounding effect, see? Those numbers really start to matter. They really start to add up more and more the longer you go. So if you are watching this and you're 19 and you get started doing something like this now, you know, you're going to be well ahead of the people that are just buying the S&P every month, and for many months watching that go down before it ever goes up again. See what I mean? All right, so here's another one. This one is actually up, well, we hit a high of 75 here about a week ago. Right now we're at 65. But when I took this screenshot We were at 58. Now this is only one calendar year. The one you saw before was 3, I believe. This one's 1. This has done almost half the performance in just 1 year. So for those that are more aggressive, this is a model we're going to be talking about, a complete trading system. Everything from what signal do I follow, how many stocks do I buy, what stop loss do I use, all of that stuff, is on full display at the show. And it's not only done it this past year, it's actually done it the last 3 years in a row. We've made more than 50% the last 3 consecutive years. And this isn't back test, guys. This is real result. This is actual trades cleared through brokerages. This one in particular, as you can see on the screens, through Ally Invest. Okay. And this past year we used them. I had been using Interactive Brokers prior to that. Those are 2 of our broker partners, right? But anyway, yeah, it's on to newer and better highs here over the past month since I took that screenshot. We're also going to be showing there's a lot of folks out there like me who I've got some of my capital invested in more of Jim's long-term plan, right? I've got some of my capital in that more aggressive plan, and then I always like to go in and just pick some trades by hand. 1, it's fun, and 2, sometimes it can be even more productive. So we're also going to show you how you can really leverage things by cherry picking and showing you some great cherry picking tactics to do that with. The one that's on the screen, I'm not going to teach it now, but that one's called Midas Touch, and it's a high momentum strategy. And when all the indicators line up as they are on that chart, it's typically a good idea to buy those kinds of stocks because they're already doing what you want them to do, and that's move up the page in a very consistent manner and on a high momentum basis. Okay. And that stock right there has been a Midas Touch stock really since the inception of that chart. So, it went from about $6 to $9 when it was already a Midas Touch stock at that time. Okay. All right. So anyway, here's let me just walk you through the agenda. It's going to be January 8th and 9th. I'll have to take questions at the end, guys. I'm riding solo here. Okay. But I'll go back up and look at some of these questions. The Tampa 2-day, well, it's not Tampa anymore. The 2-day investment seminar, day 1 morning. Things kick off for you guys at this point at 9 a.m. Okay, that's when we're going to have our welcome. 9:20, we get into a nice little presentation that I'm going to do that just kind of sets the stage for the event. And it talks about the art of buying low and selling high. And so we try to divulge to you what this art form is all about, and we do so in a very, very good way. Then what we're going to learn as we get into the next couple of presentations is we're going to start working at that art. We're going to start working at being able to buy low and sell high consistently, and that all begins with market timing, okay? Then once we get market timing behind us, then we move to stock selection. This is just like the presentation we went through, right? It's the same flow, right? Because how to become a stock market wizard is all about picking the right stocks, knowing how to do it, where to put them, how to continue to monitor them. We're going to cover subjects like how to weed the garden, how to get rid of the bad stocks and get better stocks in there, But there's a great tool in VectorVest that can get that done for you called watch lists. And even if all you do is open up VectorVest, look at our timing, and then have a watch list, we can show you how you can manage your portfolio with just those pieces of those very simple tools, okay? Day 2, we go a little bit further down the rabbit hole, I would say. And that is starting to get into really things that can vastly improve upon that already important information that we've discussed. So we're going to have a presentation called Finding the Right Stocks. Finding the Right Stocks is all about helping you discover how you can find the right stocks for you in the platform. So again, that's your aggressive, conservative, prudent, and we really lay it out. The next presentation, we go through how to build upon that idea by going back and looking at a bit of history. This way, you can get a feel for the kinds of tactics that you want to use to make the most of your opportunity. And what I mean by that is if you're a prudent investor, you can, by testing some ideas, you can then start to learn things like what types of stop levels do I want to use on the transactions that I make, and that's trade in, trade out. Which, by the way, are typically going to be a little bit more loose than the aggressive investor who wants to not take on very much risk early on, right? But still have the potential for those stocks to really run to some pretty good percentage. So what we do is we help shed some light on how you can go about discovering some of those things for yourself, okay? After the break, we talk about how to manage a retirement portfolio. This is one of the highlights of the show, in my opinion, and actually in customers' opinion, over the past several years as we've been teaching it. This will be done by James Penna, our manager of retirement services. And in that presentation, you can see that one's a bit longer. He's going to really lay out those three pieces: capital appreciation, income, right, and preservation, and how to really do it right. Then we're going to have a special presentation. That one's going to be dynamite. I'll get more on that in a second. And then Russell, we're going to have a presenter all the way from Australia. Russell Markham is going to be talking about the 5G revolution and some great ways that you can use VectorVest to uncover the gold and really focus on the best 5G stocks. It's going to be terrific. The big reveal. I'm going to feel like Steve Jobs this year, boy, I tell you, I really do think that we've got an industry disruptor. We've got a brand new product that we're going to be divulging for the very first time at this event. And I think that it is going to be awesome. So don't worry. Even if you don't attend this 2-day event, you will hear about this product. I can promise you that. but for the people that go to the event, you're going to get the first look at it. And, usually that also involves some kind of special pricing and things of that nature. Okay? But that's going to be cool. Then we'll come back for day 2. Day 2 goes more towards the swing trade direction. Okay, so day 2, we're going to be focusing on some of those cherry picking tactics. How you can pick some good winners by using the charts, things of that nature, particularly in the first morning. Dr. David Paul, all the way from the UK, will be presenting a simple method for profitable swing trading. Then we're going to be showing Stan Heller from Canada. We'll be doing some swing trading with moving averages, some new developments that we've started to see a lot of great result with. He's going to be sharing some of those new trading tactics with everyone. Then we're going to talk about the Midas Touch, of course. I think Jerry D'Ambrosio does that. And then automating your swing trades. That'll be me again. So that's how you can take these ideas and really automate it. And what I'm going to be showing is that system that's been up 50% a year after year after year. Lots of folks are up 50% or more this year, but were you able to do it the last 3 years? See, I'm surprised that the system isn't even better than it was this year. Anyway, that's okay. There's no use crying over 60% a year. All right, two-day investment seminar. Day 2, position sizing and trade management. That's a key piece. Once you start really getting into not complete systems, but trading by sight and doing these kinds of things that we talked about in the morning, you're going to need to know a little bit about position sizing if you're going to be doing that. So Dr. David Paul will be revisiting that. Situational investing, I will be doing that one as well. I think it's another highlight of the show, because what we do then in that presentation is we show you how to recognize what the market is doing and to implement tactics that are consistent with the market behavior that you recognize. So mission number 1 is to be able to recognize something. Mission number 2 then, though, is what kinds of things do I want to do when I recognize that situation? And a situation could be toppy market. A situation could be bottoming market. A situation is high momentum phase. Another situation is mature stages of the rally. See what I mean? And so there's different tactics that you typically want to think about under those different kinds of situations. For example, some of you I know like really going out there and trying to pick some stocks that are just going to go bananas. That's bottom fishing. There's a right time and there's a right way to do it. And we talk about each of those situations that I went through and how to use VectorVest appropriately for those situations to really make the most of them. Okay. Then we'll have putting it all together and we'll be done. That simple. So here it is. I reckon you got a choice. Here's the choice. You can do all this alone, or you can get it done right. Old Abe Lincoln has a great quote I've lived my life by in so many different ways. He said, though, one time, at least I hear, if I had 6 hours to chop down a tree, I'd spend the first 4 hours sharpening the axe. And so, wow, what does that really mean? It means a lot of things in a lot of different ways. But the number one thing I think is how it applies to us right now in this moment, is if you want to make the most of 2021, then you better get your butt into the seats on January 8th and 9th. That's what it means to me, because that's sharpening the axe, okay? Otherwise, it might take you 6 months or longer to sharpen the axe sharp enough to make any kind of advantage of the next year, right? So I would just get it done and get it done right if I were you. I can't make the decision for you. I can just try to help you along. That's all I can do. So sneak peek offer, special offer. Right now you can save $200. We've actually lowered the price for those of you that are in this workshop right now. Those prices, I'm told, will only be available for today. Okay. We actually lowered the page just for the time being, for the benefit of you folks. Okay. Order now, save $200. It's only $295. Normally $495 list. At the show, everybody that goes is also going to get a $100 voucher. $100 voucher good towards any product or service. You'll get it, when you register, we'll put the credit on the account. But it has to be used for, you have to go to the event, right? And then it has to be used for a product or service for the coming year. Okay, so let's say you've got an annual subscription and you're coming up for renewal. You'll be able to apply that $100 voucher to your next renewal payment. See what I mean? Or if there's another event, you can't apply it to this one. Okay, that's a question I always get. No, you can't just apply it to the $295 that's on the screen now. No, this is for another product or service. Okay, so if there's another educational event that you want to do, you can apply that $100 voucher to that next educational event. But it's just a nice little thank you. Not something that we really need to do. Just we like to give thank yous for coming to events. Okay, so along with that, you often will see special pricing on all of our products and services to begin with. So, and yes, that $100 voucher would apply to any discounted price offered during the course of this event. Okay, so you could take another $100 off the already reduced price at the event. Those that don't know VectorVest well, we always reduce the prices of our products typically at our events. So I would assume we'd probably do that again this year. That's it. That's all I got to say about that. So I'm going to go ahead and send a link out into the chat for those of you that are interested. Hopefully I've at least piqued some interest for you. If you're interested in learning a little bit more or going ahead and doing the deal, just go to the website that I just put out into the chat for each of you now. And we'll be talking to you live next week. How awesome is that? You don't even have to wait that long. I mean, it's only I don't know, 10 days away? Not even? Hard to keep track through the holidays. But we're almost there. All right, I'm going to go back and look at some questions. YouTubers, you guys know what to do. I can't see any of the chats that we don't have chat enabled on YouTube. So I'm going to go ahead and cut you guys loose. You're all the savvy guys out there, I know. So all you got to do is go to www.vectorvest.com/stream, and that'll take you to more information. Okay, and hopefully we'll see you actually for this event, right? See you soon. All right, bye.